Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar is off the highs pretty sharply. Now, we had bad data from the U.S. today. ISM manufacturing missed expectations, and this really started to set a tone. The dollar was rising after the Fed cut rates yesterday. Less dovish rhetoric from Fed Chair Powell, and the statement really too, but Fed Chair Powell, who emphasized that this was a mid-cycle adjustment and not the start of a cutting cycle. So the dollar ripped through previous highs, got out to the highest levels since May 2017. Now we're pulling back. We're back to 98. There's a lot of support in the dollar index at 97.40 to 97.70. But what also matters is the weekly close. And the weekly close out above about 98 and a quarter area is going to confirm a breakout. And we're going to see more volatility. The volatility is certainly not done as we have non-farm payroll tomorrow. But first, President Trump tweets out about China. He talks about adding a 10% tariff on $300 billion worth of goods. This potentially is like the consumer electronics and other things that are going to trickle into the consumer. We've seen the dollar pull back sharply after those comments as well. The euro has moved off lows. The euro got down and really pinged our next big major three-star level of support, 110 to 110.5 area. Really got down to there, and now we're back testing 111 and a quarter. This was a previous low in the year. Same way the euro is testing resistance now. The dollar index is working into support. So keep an eye on this as we head into tomorrow, and the weekly close are going to matter the most. So again, the dollar index weekly close out above 98 and a quarter. The euro weekly close down below 111 and a quarter. Watch those. Those are going to be crucial as we head into non-farm payroll tomorrow. Yeah, it's going to be all about wage growth, but job growth as well is something that's watched very closely. We've seen the ADP come in just a little better than expectations this week. 164,000 is where the expectations are set for non-farm payroll tomorrow. It's going to be a number that digests all together. And then, next week too, we have a lot of data coming out that's going to be moving things, and the data-dependent Fed is what everybody's been looking at. With equity markets down here today, is another thing with the dollar pulling back and equity markets down. The yen is really capitalized, and the yen is settling right near, did not really settle out above trend line, but it's testing into a big pocket of resistance, about 93.30 to 93.70, and you got a lot of resistance there. Treasuries are really just pushing higher. The 30-year is testing 158. This is supportive to the yen. The weaker dollar today and stronger treasuries has also helped gold. Gold's out to the highest level since May 2013. So the safe haven assets, now that the dollar's pulled back, and you got as well the weaker equity market here after Trump's comments. It's a perfect environment for safe havens. They're moving up right now, so watch what this yen does as well heading into tomorrow. There's going to be a lot of volatility. Stay nimble out there, but volatility, if patient, can breed opportunity. So watch all of that, and then looking at what's falling off a cliff here is the Aussie. The Aussie dollar right at 68. We closed below 68 on a week. I mean, there's not a lot of support here between 68 and 63. And that's a big range. I mean, nothing moves in a direct line, but this is a big cliff here that it could go over at 68 if we get a weekly close. Watch that in the Aussie. PPI data, but more importantly, retail sales data out of Australia tonight. And then with the Canadian dollar, it's remained fairly constructive given what commodities have done. Crude oil is down about $4 on the day. Remember, it did settle up on the high end of its range yesterday after a good EIA report, and then the Fed. The statement came out at 1 o'clock. Crude oil settled at 1:30, but the dollar and equities didn't start moving much until after Powell began talking after crude settlement. So crude's at $4 from the highs. Given such, the Canadian dollar is holding ground really well. Now, we have jobs data from the U.S. tomorrow, but not jobs data from Canada. Canada jobs will be the next Friday. We do a trade balance data out of Canada, but the Canadian dollar is holding our crucial support level, 75.60. This could be a really good area to see this base and make a next move. Remember, you're seeing diverging policies, but what you also have to be aware of, too, is what are commodities doing? What's the sentiment and risk? Are the equity markets rolling over, too? So you got to keep the pulse on everything here with that Canadian dollar, and to give you the opportunity that not only if you do step in, which we do see as a buy opportunity here, but a reason to hold it too. So, but give us a call. We're here to talk about anything on the board. A lot coming up here right before the end of the week. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.